Hi, welcome to Accounting Play. I'm John Gillingham. Today we're talking about the accounting schematic, the accounting equation, and how it all looks in the form of T accounts. Now, if you haven't done so already, make sure you get the Learn Accounting game, also referred to Accounting Play Learn Debits and Credits. This will have this schematic in there because clearly my handwriting needs a little bit of work. That's why I made these apps. That's why I made the accounting flashcard apps. And that's why I have the Learn Debits and Credits ebook all for free, accountingplay.com/subscribe. I hope you're studying this. Debit asset up, credit down. Okay, remember that. Now, subscribe. If for whatever reason I'm charging for the book, just email me, john@accountingplay.com. I love all your feedback. Thanks so much, guys. Check it out. So what are we dealing here? Outside of me just wanting to go surf and not do this, actually I really want to do this right now. This represents the accounting schematic. Now, the easiest thing to start is we have 5 accounts. Assets, cash, moolah, bling things, cheese, cheddar, right? Stuff that's valuable to the business. It's not an expense, it's something big and tangible, like a house. All right, we get the idea. Assets are pretty obvious. We have liabilities. Liabilities, money you owe, debt, credit cards, and we have equity. Equity is the business value. Total assets minus liabilities are going to equal your equity. So we also have our revenue, money we're making during the business. We're shipping product, we're doing app development. Maybe we have our own fashion business that we dreamed of, that we went to school for and took on $55,000 of liabilities, and now we make $25,000, and that's a whole nother story. So revenue, right? And expenses, the things that are coming out the door. So without further ado, I'm going to go ahead and just go over these debits and credits concepts and what does it mean. Now, if you're just picking up, you can go see the last video, but essentially in accounting, every transaction has a debit and a credit, because we want to explain how transactions happen and what do they mean. Bear with me, let me give you an example. Let's take an asset transaction. We purchase a car. Asset goes up for the car, and it also goes down. So you need a mechanism to record both sides of those transactions. So it's logical, increasing asset up, decreasing asset down. One's a debit on the left, a credit on the right. Now, you just need to memorize this, how these accounts increase and decrease. Another common transaction is issue stock to shareholders for money. Money comes in, it's not revenue, it's money for stock and ownership in the company. Therefore, cash increases asset, and so does equity increases. You'll notice that would be a increase assets with a debit and increase equity with a credit. Moving right along. Let's just start with assets. We must memorize. And before we even go to assets, T account. Debits on the left, credits on the right. Debits on the left, credits on the right. Forgive me if it's backwards because I'm working into a mirror. Debits on the left, credits on the right. Balance sheet, asset equals liabilities plus equity, so tight. So check it out. Assets. Debit, assets up. But wait, John. You tell me, no, debit is not this or that because of my checking account or my prior experience with these terms. No, forget it. Debit, asset up. Credit, asset down. What's the number one asset? Cash. So I like to say debit, cash up, credit down. Debit, cash up, credit down. That's assets in blue. Now, liability and equity are in black because they're precisely the opposite. And you're going to say, that's precisely confusing. And it is. To increase a liability is a credit, decrease debit, increase equity credit, decrease debit. Not fun. A lot of people drop accounting because they can never get a hold of debits and credits, and they miss out on all the stuff that I think is so fun. How the business is growing, how to make money in accounting, how to calculate your financial ratios and see if your business is profitable, how to be a good investor in a company, all these wonderful things, and people give up because of debits and credits. That's why I made the LearnDebitsandCredits.com ebook and premium video course on this video, because it's ridiculous to drop it. So repeat after me. Debit cash up, credit down. Other side now, liabilities and equity, flip around. Debit cash up, credit down, other side now, flip around. Great. On to revenue and expense. I got revenue credits, expenses as debits. Revenue credits, expenses as debits. Revenue credits, expenses as debits. Revenue increases with a credit. Credit revenue up. Occasionally you'll decrease revenue, but not really, because revenue is just accumulating in the account. Accumulating, 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 accumulating with revenue credits, revenue credits, revenue credits, revenue credits, accumulating. That's why it's underlined. Same thing with expenses. They're just accumulating. Debit expense up, debit expense up. Accumulating expenses, pop, 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 pop. Revenue credits, expenses as debits. From the top, debit cash up, credit down. Other side now, flip around. I got revenue credits, expenses as debits. Now, if you can remember that, and you sketch this out before a test, your exam, sketch out the balance sheet side. Hello, balance sheet. Assets equals liabilities plus equity. And sketch out revenue minus expense. Then you can know debit cash up. You got your arrow here. Credit down. Other side now. Flip around. And then you say revenue credits. Credit revenue up. Other side debit down. You just know. If one's up, the other's down. Expense debits up, down. That's one way of memorizing it. Another, notice how assets and expenses are both blue. Funny. Why? Debit asset up, debit expense up. Debit asset up, debit expense up. Debit asset up, debit expense up. So check it out. If we know these arrows go up and down and up and down, debits equal to credits. If we know debit cash up and debit expense up, everything else is reversed. If you can remember this schematic. Now, in the accounting play game for iOS, that's iPhone, iPad, stuff like that, there's a schematic on here that you can memorize. And you can play with these T accounts. But absent of that, memorization. Now these all boil down to a profit or loss, revenue minus expense. And just so you know, this took me a long time to get, that net result in the debits and credits world will flow up to the balance sheet. But that's a little bit beyond what we're talking about. Today, we're just talking about how to increase and decrease. So let's pick a transaction. Let's issue stock, right? Debit, cash up, credit, equity up. Let's buy a car. Debit asset up, credit asset down. Cash goes down, car goes up. Let's make money. Debit expense up, credit revenue up. So everything's a debit, credit, debit, credit. For now, we're just looking at very basic quiz questions. How do you increase cash? With a debit. How do you increase equity? With a credit. Very confusing. So practice the Learn Debits and Credits ebook. There's a comprehensive problem set. And just dedicate the hours it takes to get this stuff secondhand. And that's what the game's there as well. So you can just do this stuff without thinking about it. Because here we say debit assets up, we know that. Credit expense up, we know that. But you might not know that additional paid-in capital, oh my gosh, additional paid-in capital is a credit. And you might not know that Notes payable is a liability, or accounts receivable is an asset. So burn this into your brain. If you need your free materials, check us out. And it's getting kind of late, so I think I'm going to hit this one. Thanks.